Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down both from an order flow and technical perspective. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move. And in doing this analysis, I will provide as much free education as possible. So I really suggest that you stick to the video to the end. So without further ado, let's go straight to the charts.
In today's video, I want to speak about gold because at the moment we do have quite interesting price action and structure. So first I will be covering the technical side, then we will go and see what we have when it comes to the order flow. Now starting here from the technicals, what we can see is that the market is currently testing a very strong area of previous monthly support, which is now turned resistance. In fact, from here the market created all this move to the upside, confirming this zone as support. We then had the break below the area, and as you know, previous support, once it is broken to the downside, is turned resistance. So what we have at the moment is a market which is retesting previous monthly support, turn resistance, and we could expect a potential rejection to the downside. Now, if we drop down on the weekly time frame, what do we have? Now, from a weekly perspective, we can notice how the market had created this overextended W formation. Now, in general, after the creation of an overextended W, what you would like to see is for the market to create a correction. Specifically, you would like to see the market provide a correction at least to the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, the impulse leg would be from this low all the way to this high. And we can see that since the market hit the high, we haven't really retraced to this 0.32 yet. So it would appear like there is the possibility to see a potential rejection lower. Now, dropping down on the daily time frame, what do we have? Now, here on the daily, I did speak about gold a couple of days ago. I spoke about it when we were around this area. I made a full breakdown explaining all the reasons for which we could expect first a correction and then the creation of a W formation, from which then once again we wanted to see a rejection lower. And so far that is exactly what the market has created. And by the way, I will link in description these previous analysis so you can go and check them out for more free education. However, at the moment, what kind of structure we have here? Now, from a daily perspective, it's pretty clear that the market is currently testing the neckline of W formation. And by definition, the neckline of a W is previous resistance turned support. So here in the daily, we're testing previous daily resistance now turned support, and we could expect a potential rejection higher. However, since on the monthly and weekly, everything is aligning for a potential move lower, it will be of key importance to check out what will happen around this daily structure zone. In fact, if the market here will remain above this support, the market will easily continue higher. However, if the market manages to break below it, at that point, this previous support would be turned resistance. And at that point, we would have the monthly, weekly, and daily, which would be all indicating the same direction, which is a bearish move, because we already know that monthly and weekly are quite bearish. So if the market here manages to break below the support and go for a retest, this would be a very interesting area inside of which we could be looking for a potential rejection lower. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for gold, we can see how with the last reports, net positions have been decreasing. We went from having 126k net positions, we're down sitting now at 110k net positions, with almost 1,000 shorts added with the last report and 5,000 longs getting closed. Now, if institutions, after a move to the upside, are closing their longs in the thousands, specifically 5,000 longs closed with this report and 12k with the previous report, that essentially means that all across this area, there is currently profit taking happening from an institutional perspective on the longs that they had added around this zone. So During a situation in which you're having institutional profit taking, there is definitely a possibility to see a potential rejection lower. Now, we do not know if the market will break below the support, because until it will remain above that zone, it can easily continue higher. However, if we actually get the break below the support on the retest, we will have good probabilities for this potential move lower. So if that happened, how we could be approaching this potential shorting opportunity? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential shorting opportunity for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge discount on the upfront price of the mentorship program, a 400 euros discount on the one-time payment for lifetime access. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can also get a full refund credited back into your trading account, which is optional. You don't necessarily have to join Blueberry Markets. And if you scroll lower, you will see that directly from here, there is still time to join before the timer goes to 0 and the offer ends. However, spots are limited, so if they get filled up before the timer goes to 0, the offer will end anyway and price will go back to normal. So I really suggest that you take advantage and join directly from here to gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board.
If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I will see you in my next video.